Seems counterintuitive given the year we've had, but Australian households are the richest they've ever been. Total wealth is up a staggering 20% on a year ago, the strongest growth in 11 years. Now, there's plenty watching, though, feeling not so flush. That's probably because they don't own a house. And that's indicative of the COVID economic recovery. Those who have done very well. And as this chart shows, it's the older generations that benefit largely from home ownership. They're positively booming. This week, the RBA addressed the risks around skyrocketing house prices by saying essentially it's best not to interfere for now. It would be terrible for those that own and the banks if prices were to fall. But in her speech, the RBA's Michelle Bullock said nothing of the risks of the increasing wealth gap and inequality, something the IMF highlighted today. Turning to markets which eased, rattled by news that China's flailing property giant Evergrande failed to pay an $83 million interest bill today. Energy stocks rose after crude prices hit a 3-year high, and Solilu's Premier continued to rise from yesterday's results. The Australian dollar ticked lower today, while global markets were buoyant overnight. The Bank of England hinted the economy is tracking so well it could raise rates by year end. Back home today, the Treasurer delivered the economic case for net zero by 2050. But investors have been making the case for companies to move a lot faster for a lot longer. Banks in particular have faced a lot of scrutiny around who they lend to. And as this chart shows, they've been responding. But it's only just the start. That's finance.